Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lipton. Good morning, Lawrence. Happy Friday.
Good morning.
Right.
Yeah, at least, as much as it can be.
Let's take a look at Bitcoin. The CoinDesk Bitcoin price XVX index is actually rebounding from yesterday's fall. Now $39,244, up about 10.4% over the past 24 hours. CoinDesk Ether price ETX index is at 2697, also racing ahead about 12.6% for the day. The DFX, CoinDesk's DeFi index, is at 250, bouncing up almost 20% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So it's day 2 of the Russian invasion into Ukraine. Over 100 Ukrainian soldiers are dead, 100,000 displaced according to the UN. And Lawrence, the markets are up.
Yeah. There are a couple of reasons this could be the case. No one's exactly sure. First off, you see the rise in Asian markets. Part of it has to do with this idea that, for instance, the U.S. Fed might not impose the sort of tapering and tighter policy monetary policy. So that might, they're holding off on inflation curbs for the time being. That might happen at the next meeting in March. But it could also be that the markets are looking at this fight in Ukraine as a foregone conclusion, that it's over basically. That the Russians have won and things will go back to normal in crypto land, which doesn't seem to particularly care all that much about human life. But that's a different story.
Or people could be using crypto as a safe haven. Who knows? I don't know. Or lots of volatility ahead either way. All right. So people are sheltering in subway stations in Ukraine. Russians are on the brink of entering Kiev as their own citizens protest the war back at home. Ukrainian President Volodymyr Zelensky has declared martial law and military mobilization to defend the state. Males aged 18 to 60 are banned from leaving the country. All right. In the meantime, U.S. President Joe Biden has imposed new sanctions on Russia to include blocking technology exports and cutting off Russian banks, oligarchs, corporations from access to offshore funds and the global financial system. Britain, Europe, Japan, and other countries are joining in. Could cryptocurrencies bypass these sanctions, though? Joining us now to discuss is former CIA analyst Yaya Fanusie, who's now currently Chief Strategist at Cryptocurrency AML Strategies and Adjunct Senior Fellow at the Center for a New American Security. Welcome, Yaya, to the show.
Thank you. Great to be here.
Has the infrastructure for cryptocurrencies developed enough to bypass government sanctions? Is it ready for prime time?
The short answer is no. There's a lot of talk about crypto helping sanctioned governments evade sanctions. I've been looking at this for a while, but I think the real story is that you're only talking about maybe sort of de minimis use. I mean, the scope, the scale of crypto markets, the liquidity doesn't make up for what would be lost or what is being lost through disruptions to the banking sector for Russia or for any sort of sanctioned country. I sort of liken it to, if someone were to block your paycheck this week or this month, and then you had to resort to your kids' piggy banks or your own piggy bank. You're probably going to use some of those tokens, but remember the scale of the economy and the banking sector really is much bigger than what crypto markets would probably account for in the short term.
Nonetheless, Mr. Fanusie, if Russia can find ways to skirt sanctions over the long term, and there are plenty of counterparties in the crypto markets that would be willing to take their money. I mean, we know this for a fact. Does it show the likes of North Korea a way out of any sanctions, the likes of Iran that have been skirting and has willingly and openly taken in Bitcoin mining? Does it show them a way out of sanctions and a way to evade it?
What these activities show is a direction to use, cryptocurrency technology or blockchain technology in attempt for sanctions evasion. And a lot of this, some of this is low-hanging fruit. I mean, you mentioned North Korea, low-hanging fruit, like hacking exchanges, right? There's a lot of revenue that's gathered by that. We've done some analysis on that. But again, just scope and scale. I think what it points to is this long-term attempt to get a little bit more sophisticated about cross-border payments. And so I think what we've actually seen is that, there's hacking, there's mining, but if you look at Iran in particular, Iran is actually launching its own national digital currency project, which may have some elements of blockchain technology in it. We don't know. We see that even with Russia. Russia had been doing blockchain pilots. What is this signaling? They're coming out with a digital ruble. What it's really signaling is this idea for a national digital currency and an alternative, or CBDC, right? I mean, your audience knows that term, CBDCs as a potential way to get away from the global banking system. But that's a long-term vision.
Yeah. Do you think it's possible that Russians are buying cryptocurrencies, the Bitcoin right now? Perhaps that's why we're seeing a bit of a bump in the prices?
I mean, perhaps, right? We all know that there's a lot of murkiness in the pricing of Bitcoin. Like we don't know exactly how, but I think looking at other crises, it's definitely, it seems evident that in times of sort of war, either financial crises in a jurisdiction, a war. Obviously, we saw this even in Afghanistan with the pullout, the U.S. troop pullout. During those times, populations are looking for, like you said earlier, safe havens. They're looking for a way to preserve their funds, and so I think that may be rippling a bit. But again, that's a little bit of a different case than actual sanctions evasion. There may be a mix, right? But some of it is people are looking for a way to sort of hedge their bets.
So we see that a lot of critics are coming out against President Biden, saying that he didn't bite hard enough, that his speech yesterday didn't do enough. That one of the things that needs to happen, of course, and it's not just the U.S. that would decide this, but it would be the nations of the world to kick Russia out of SWIFT. There's some resistance from that by Germany, which gets a lot of its cheap energy from Russia. Would that do anything, though? Would kicking Russia out of SWIFT be helpful or harmful to the situation? And what can and should be done, and besides that, to kind of strengthen the sanctions against Russia?
It's a tricky issue, and I don't want to be insensitive by using the metaphor, but kicking Russia out of SWIFT could be considered by some almost a nuclear option. I mean, it is a big deal. It is an option that is used rarely. We saw it with Iran, actually, to talk about another sanctioned country. It's huge, and of course, a sanctions regime is thorny statecraft. It may be in some ways more complicated than military activity, because there are all these ripple effects. There are all these other consequences which actually bounce back to Europe, as you mentioned, right? A lot of Europe is getting energy from Russia, so it can't be. It would have to be deployed with extreme caution. That may be, again, sort of a nuclear option that is that Biden and others sort of hold as maybe a trump card or whatever.
All right. So the images you're seeing right now are protests around the world against war in Ukraine, and folks putting up a united front in favor of Ukrainian peace. Yeah, I wonder, how will sanctions impact Russian banks, oligarchs, and corporations?
Sanctions can have, and probably are going to have, a big disruptive effect. I mean, you think about it. Even if, even though the U.S., even if trade isn't happening with the U.S., right? So much of international. Will they be strong enough? I mean, they're going to at least influence, I think, some of the calculus on Russia's part. And I think we even just saw recent news that Putin is about to meet is potentially maybe meeting with Ukrainian leadership, right? So, I mean, already we're seeing that there may be some, the impact is actually, I think, probably happening. Sanctions are, again, they can be a nuclear option. The banking sector needs access to the U.S. dollar. If Russian banks can't deal with the EU, I mean, that's huge. And again, crypto, not sort of getting back to crypto. I mean, crypto, obviously is going to play a role, right? I mean, oligarchs are already finding ways to skirt some of the sanctions that already exist. And even the sort of the personal sanctions, there's discussion about, Putin being sanctioned. Remember, once you get sanctioned by the U.S. in particular, there's a ripple effect on, not just you, but things that are connected to you, your family, your business, your business connections. It does have, I would say, almost an immediate effect, especially these sort of high-level, high-profile sanctions. So it's going to probably bring, I would say, well, I don't want to get too much into, think of Putin's calculus, because I'm not, again, an expert on Vladimir Putin. But it's significant. Short of warfare, sanctions are an important tool.
Well, we do know that President Putin is perhaps the richest man in the world, and so sanctioning him would severely impact. I mean, he's practically the GDP of some countries. What would happen, though? How could they do that? How could they sanction an individual versus a country? First of all, second of all, getting back to this whole thing about kicking Russia out of SWIFT. We had that image of President Xi and President Putin in Beijing during the Olympics, and people are saying, well, they're kind of cozying up now. Is it possible for Russia, for instance, if they lost the banking system with SWIFT, that they work it out with China and maybe latch on to that system?
Well, taking that last thought first, I mean, that's why it's important to think about time horizon. What are we talking about in terms of the risk? So let me explain why it's hard for that scenario to play out and to benefit Russia in the short term. Let's say Russia and China do cooperate, or let's say Russia is doing its digital ruble, right? Right now, the way central bank digital currencies, even with China doing its CBDC, the way that those payment instruments are deployed, at least in the sort of pilot phase, is they're deployed through banks, through the financial system, right? The central bank creates this new instrument, and then it's the banks and the financial players, payment companies that would be deploying it. That's how things are constructed. So if Russia has its digital ruble and as China has its digital yuan, banks are still involved. So the reason why in the short term that's difficult to have tremendous impact is that those banks, which are going to have this digital ruble or whatever, still need access to the US dollar, still need access to the global banking system. So that's why I say in the short term it's difficult. But in the long term, Lawrence, yes, the idea that if there is a system that develops where CBDC to CBDC cross-border activity happens, and there's a separate system where the banks aren't involved, but that would take time, and that's not going to happen just because you create a new digital currency.
All right, yeah. Fascinating conversation. We've got to end it there, but thank you for joining us. That was Yaya Fanusie, former CIA analyst and adjunct senior fellow center at the Center for New American Security.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Well, turning it now to CFTC Chair Rostin Behnam. He told Congress earlier this month that his agency should oversee the crypto spot markets and add an extra $100 million to their budget just to get the job done. So joining us now to discuss that and other things is former chairman of the CFTC, Giancarlo, who is also senior counsel at Willkie, Farr, and Gallagher. Welcome back, Chris.
Well, it's good to be with you, Lawrence and Christine. And by the way, it's great to follow Yaya. He's a brilliant analyst, and I have the pleasure of serving with him on a committee at the Hoover Institute that's looking at CBDC, specifically China's ECNY, and he's a great contributor to that effort. So it's a pleasure to follow him. If I could just say, a lot of focus is on whether a driver of Bitcoin might be sanctions avoidance, but I actually think that perhaps that is not looking at a broader picture, which is just the amount of currency value destruction that citizens of Central European countries, and not just Ukraine, but perhaps Poland and the Baltic states may be concerned with may be a driver for moving value into Bitcoin. So I think maybe sanctions. I thought Yaya covered the issue of sanctions avoidance, but I think a driver could be the same thing that's been driving Bitcoin in times of bear markets over the last few years, is that desire to preserve value. So we'll look to see that in the coming days.
Another thing that Yaya brought up was this whole idea of the CBDC, and potentially as a way to get around some of these global sanctions down the road. You're involved in the digital dollar project. That's something very close to your heart, of course. So would a CBDC be more harm than good by allowing countries like Russia, like Iran, like North Korea to skirt sanctions and create a system by which they can basically get around these things with just the flick of a switch?
I'm very concerned that extensive use of sanctions in this case, and I'm not advocating for or against, I'm just speculating that extensive use of sanctions against Russia, perhaps against China, if there's any other activities going on geopolitically, could be the last hurrah for sanctions, because I think it could drive and accelerate work by China and Russia to develop CBDCs, to use it in their foreign relations, in the case of China, in the case of their Belt and Road Initiative, and to really move portions of the globe off the dollar-based, Western bank-dominated, account-based system that we have today. And so CBDC is absolutely an effort by many non-aligned countries to move away from the sanctioned power that exists in our current Western bank-dominated, SWIFT-based messaging system, account-based banking system. So there's no question. It's a point that Daniel Gorfine and I made 2.5 years ago in our Wall Street op-ed, saying if the U.S. could send a man to the moon, we could put the dollar into cyberspace, advocating for the U.S. to accelerate its development, its exploration of central bank digital currency. For China, it's not just about developing its own ECNY. It's also about dominating the underlying CBDC technology in the same way they've done with 5G technology, so they can be a major exporter of CBDC infrastructure to countries around the world that desire to have their own central bank digital currency, but don't have the wherewithal to build the core technology from scratch. And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China. And so that, and for countries that may wish to avoid sanctions, whether they be Venezuela or Cuba or other countries. CBDC is absolutely being seen as a form of statecraft by countries that have been subject to Western sanctions in the past and wish to have a way to avoid that in the future.
So developing a CBDC is going to take some time. It might take months, if not years, to get it done. In the meantime, we have troops on the ground in Kiev and outside of Kiev and taking control of Chernobyl. So should Russia be kicked out of SWIFT in the meantime? Would that do more harm than good? The same question I had just posed to Yaya.
Yeah, perhaps I'll leave geopolitical response to the people that are in charge of it. I guess what I would say, it's a shame we've actually even come to this point.
Mm-hmm.
Perhaps steps could have been taken.
Earlier, Lawrence mentioned the CFTC chair, Rustin Benham, is seeking that the CFTC regulate the crypto markets. And, when thinking about, what a regulatory agency should be monitoring, what they should be concerned about, could you expand upon what that would be and why the CFTC would be a good agency to regulate that?
Russ Benham, who I had the pleasure to serve with, is a very thoughtful, deliberate, patient understander of these markets. He served as a senior aide to Ag Committee Chairwoman Debbie Stabenow. Even before he came to the CFTC, he's been thinking about this. And back in 2015, before he arrived at the CFTC, when I was there with then Chairman Tim Massid, in 2015, we looked at crypto and declared that Bitcoin was a commodity. And we knew then that declaring it a commodity did not give us the authority to police the spot markets, but prepared us to be able to greenlight eventually in 2017 under my chairmanship the creation of Bitcoin futures and the creation of that marketplace. And so here we are now in 2022. We've got 7 years experience as the leading agency for commodity-based cryptos, which is Bitcoin and Ethereum, and yet still no underlying core authority over the spot market. And so when Chairman Benham testified 2 weeks ago, he's been looking at this and thinking about this for a long time, and he made it clear to the Ag Committee that the CFTC has a great deal of institutional understanding, knowledge, analytical capability, data sets for Bitcoin and Ethereum, but not the authority over the underlying spot markets. And if any agency in Washington is to be granted that authority, it absolutely makes sense for it to be the CFTC with its principles-based approach to regulation and its long history, 40-year history of product innovation and of working carefully with innovators in the market. And so last week, I underlined Russ Benham's thoughts on this with a call for Congress to grant the CFTC that authority at the federal level to oversee spot crypto trading here in the United States.
A great concern among regulators, especially the SEC, is that there's market manipulation. I wonder, where is this market manipulation coming from, and how would the CFTC be a good regulator to oversee that?
Yeah. So look, put things in perspective. There's market manipulation in every market. There is market manipulation in some of the oldest grain markets and metals markets, and there's market manipulation in markets overseen by the SEC and the equities markets. No regulator is ever going to eliminate and take market manipulation to zero. The job, however, is to police that, though, is to what police do, is to exercise law enforcement powers and to go after the most obvious cases and set an example and let the honest participants in the market, which are 99% of the market participants, know there's a cop on the beat and know that wrongdoers will not be caught always, but will be caught often. And therefore, it's a place for good men and women to conduct business. And so,
if the markets are manipulated, who's doing the manipulation? Is it whales? Is it? I don't know.
It's all of the above, as it always is. It's all of the above. It can be whales. It can be it can be smaller players. It can be one-offs. It can be teams of individuals. There's all kinds of patterns of market manipulation. And, the CFTC's been in business for 40 years policing other markets and is very good at tracking this type of activity. And as an agency, one of the initiatives I spearheaded was to move it increasingly from sort of a focus on entity-based to more of an activity-based approach. Bring in big data analytical capabilities, pattern recognition capabilities, so that the CFTC could marshal all the fabulous data that it collects on markets to see really where the repeat offenders are acting, to see patterns that indicate manipulative activity. And so, as I say, if you look at the range of regulators in Washington, and we all know there's plenty of them, but I think when it comes to crypto-based, commodity-based cryptos like Bitcoin and Ethereum, there is no agency at the state level, certainly, and at the federal level, like the CFTC, that is as well poised as it is to bring that sort of police enforcement approach to Ethereum and Bitcoin spot markets.
So one of the issues, of course, with Bitcoin, as it is with the gold markets, for instance, with any market, is that it's not just based in the United States. These are digital assets that are traded globally, instantaneously. How would the CFTC police those spot markets, if you will, when simultaneously those trades are happening in countries that may not particularly care about our regulations, may not particularly care about manipulation or money laundering or whatever it is that's going on in the spot markets.
Yeah, and it's a challenge. It's a challenge in all markets, right? If you think about it, Lawrence, I mean, the CFTC has oversight of energy futures markets, energy derivative markets, the world oil markets. A lot of them trade in the U.S., but others trade outside. The CFTC's jurisdiction is a challenge, as it is for any national regulator, and that's why we have very strong cooperation with regulators in the EU, in Britain, in Singapore, in Australia, in China. The CFTC cooperates with its counterparts around the world, and that's basically how any type of law enforcement gets done, whether that's crime on the street, smuggling, money laundering, any form of global criminal activity in a nation state world structure has to take place through cooperation arrangements between international regulators. And the CFTC has a long and very proud history of regulatory cooperation. So that's how it would be done for crypto, just as it is in all the other areas of supervision that the CFTC handles.
All right, Chris, making the case for the CFTC regulating the crypto markets in the U.S. Thanks for joining us. That was Chris Giancarlo, crypto dad, senior counsel at Willkie, Farr, and Gallagher, and former chairman of the CFTC. All right, coming up, crypto markets update with Strips Finance, an interest rate derivatives exchange on Arbitrum. All right, the market's in recovery mode. Checking in on Bitcoin, the CoinDesk Bitcoin price XVX index is at $39,236. Bitcoin is up about 11% over the past 24 hours. The CoinDesk Ether price ETX index is at $26.95, jumping over 13% for the day. And the DFX CoinDesk DeFi index is at 250, racing ahead about almost 19% over the past 24 hours. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Lots of greens on the screen right now. So joining us now to discuss the crypto markets is Ming Wu. He's founder and CEO of Strips Finance, an interest rate derivatives exchange on Arbitrum. Welcome, Ming.
Hi, thanks for having me, guys.
Thank you for being here. We're seeing this kind of bullish day today in the markets, and a lot of the alts, for instance, are up, but of course, Bitcoin and ETH, the two major cryptocurrencies, they're also shooting up. This, despite what we're seeing in the battlefields in Ukraine. So, what exactly is happening? Have the markets basically given up and said, "Well, this is what it's going to be. Let's just keep buying crypto. Why not?"
So I think if you look historically at previous geopolitical issues and what's happened to equities and risk assets after major wars, the start of major wars, the case can be made that actually it's profitable to buy the dip when these major political moves are made. And I think yesterday we also saw that Treasuries started to catch a bid, pricing in half the probability of a 50 basis point hike in March, dropping from 30% to 16% for a 50 basis point move in the Fed in March. So I think the case can be made that traders saw that and they were buying the dip in equities and a lot of risk assets, and Bitcoin and Ethereum, given the high correlation to equities right now and the high beta in the crypto markets, the recovery followed and flowed into the crypto markets as well. So I think on a macro scale, that's one explanation for the strong recovery in Bitcoin and Ethereum prices yesterday. Besides that, I think there's also the theory going on that if Russia is kicked out of the SWIFT system, then you may see everyday users in Russia, start looking for alternatives and start hedging their bets. And cryptocurrency is, one of the possible venues of getting their money out. And you might not see Bitcoin and Ethereum being used by Russian corporates and oligarchs to move billions of dollars, but everyday Russians that need to move couple $1,000 to other currencies might look to cryptocurrencies as an alternative.
It's interesting you say that, Ming. I mean, is that possibly why we're seeing this bounce? And if so, do you have any insights on regionally where yesterday's selling was happening and where today's buying is happening?
Yeah, so I think, based off the time zone that the sell-off happened, the argument can be made that it started during the European hours, right, and flowed on to the US hours, the beginning of the US Open. And then the recovery started to happen after the US close and the beginning of the Asian session. So I think that, just looking at the time zones of the price action, the case can be made that it was probably selling from Europe in the beginning, and then probably caught a bid later on as people started to pick the pieces and figure out what was going on in terms of the Russian Ukraine war.
So is this sustainable? Are we going to keep this prices up where we are over the short term? Are we going to break 40,000? Long term, where do you see things going as well?
Yeah, so I think on a macro level, the Fed is still in driver's seat. We have to take direction on where the Fed is going to take the rate hikes. And I think a lot of the global markets, equity and risk markets like crypto is going to take direction from whether there's going to be more or less hikes from the Fed this year, and whether the war is a factor into that equation. And I think that right now the market's pricing in less hikes given the instability of the situation with Ukraine. And so that has put a bid on a lot of risk assets, including Bitcoin and Ethereum. If we see, I don't want to say that war is necessarily good for crypto, but if we see for the escalation, then we may see a delay in Fed hiking cycle for this year, and that may put a bid on a lot of crypto prices.
All right, Ming. Great analysis. Thanks for joining us. That was Strips Finance founder and CEO Ming Wu. Coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
Hi, I'm Doreen Wang, social media and associate producer, and you're watching CoinDesk TV.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick.
Good morning.
So you don't see, in your piece, you don't see crypto having a role here in dealing with sanctions. What is that all about?
Yeah, so a couple of headlines yesterday and on Wednesday suggested that Russia could use cryptocurrency to evade international sanctions. Basically, Russian entities could take advantage of Bitcoin and other cryptocurrencies to still remain part of the global financial system. I spoke to a couple experts who, first off, we're not seeing any kind of activity that suggests that Russian entities are even trying to, move into crypto at this time. So, if we were to see this kind of sanctions evasion, you would expect there to be some activity, stockpiling of crypto, more volume. We haven't seen that yet. But also, even if we did see that, it's unlikely that Russia would want to use crypto because it's, the whole premise is you want something that is kind of, stateless. It's it's unmanipulatable by, authoritarian regimes. And Russia at this point sure looks like an authoritarian regime. So, just a couple of weeks ago, the central bank was trying to ban crypto. Even now, the parliament and the government there is suggesting heavy restrictions, even if they are going to legalize it. So it seems unlikely that the government's going to go all in on crypto, or we're going to see an adoption. And even beyond that, we have to ask what kind of infrastructure is there that would allow the Russian, government or Russian entities to trade in through and out of crypto. Right now, the kind of most successful or publicly successful sector that's been able to handle this is the ransomware side. So cyber criminals and those who are, deliberately trying to operate under under the auspices of not being related to the government. So there's a number of factors that might make it difficult for Russian entities to adopt Bitcoin as a primary, currency at this point.
Mm-hmm. Nick, any update on global sanctions against Russia?
Yeah, so we're actually seeing a pretty comprehensive suite of sanctions from various governments around the world. The UK, South Korea, Japan, Canada, the European Union, the US have all announced their own different sanctions against Russia. The most severe seem to be trying to basically cut off Russia's largest banks from accessing the financial sectors completely in the US and in the UK and the European Union. Basically, the three countries announced yesterday a suite of sanctions that seize the assets of these banks that are held in their respective territories. So the U.S. is seizing all U.S. held assets that are owned by VTB Bank, for example, which is Russia's second largest bank. They're blocking any kind of activity. So any trade that requires, interacting with dollars, yens, pounds, or sterling, are completely cut off. And basically, the idea is to enact some of the penalties that you might get by cutting them off from SWIFT without actually cutting them off from SWIFT. So the SWIFT is the kind of global messaging financial messaging system that's currently off the table, but these sanctions are kind of seeing the same effect, but at a different level on the transaction process.
Is there a sense that they'll be effective given the, on the Ukrainian side, the President Zelensky seems to think, there needs to be more teeth to the international reaction. But will this be enough? Because it takes a while for sanctions to go into effect.
Yeah, I think it's too early to say. The idea of these sanctions is premised on the this idea that these Russian entities, the banks, the financial system, as well as the oligarchs who are named in sanctions. So President Biden announced that they're also seizing assets belonging to several, in his words, Russian elites and their adult children. That they will be outraged enough by the sanctions to turn the pressure on Russian President Vladimir Putin. And I think it's just way too early to see if that will be effective. Mm-hmm. We have, presumably this is something they anticipated. So the question is, are these sanctions going to convince him to change his mind when the threat of these sanctions weren't enough to convince him not to invade in the first place?
Yeah, well, we'll see how those talks go between Ukraine and Russia. All right, thank you, Nick. Thanks for your update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. And as part of CoinDesk's Tax Week, we are publishing a series of articles to warn you of various crypto tax nightmare scenarios. CoinDesk columnist Jeff Wilser listing several taxable events you should be aware of. Have a listen.
Welcome to the horror stories of crypto tax nightmares. Let me share 5 real-life scenarios that might just haunt your dreams. First scenario, the buying in the bull market, sell in bear market nightmare. This one is the most common and the biggest, and it usually looks something like this. A 31-year-old real estate agent in Chicago dabbled in trading altcoins in 2017. This dabbling made him around $650,000 in profit. He had no idea he had to pay taxes on these trades. Then the market tanked. So by the time the tax man came, his crypto holdings plunged by 50%. He owed $120K in taxes, and he was, and I'm quoting him, seriously screwed. To pay the tax money, he had to stop hodling and liquidate his Bitcoin at the very bottom of the market. Second scenario, the magic crypto money nightmare. So many people believe that once you've converted your dollars to Bitcoin or Ethereum, now it's in the realm of magic crypto money and nothing is taxable until it's cashed out for fiat. I wish it worked that way. So this one guy had acquired over 100 ETH in 2015, back when it was still very cheap. Then this past year in 2021 brought the frenzy of NFTs. He wanted in on that action. So he sold some of his ETH to buy an NFT, thinking it was all in magic crypto money lands. But here's a twist. He racked up over $100,000 tax bill. Third scenario, the transaction hell nightmare. Do you keep a copy of all your trades across every exchange? Let's say you're making a flurry of trades across Coinbase, FTX, Binance, KuCoin, and on and on and on, without keeping copies of each transactions. Every single one of those is a taxable event. I spoke to Michelle O'Connor, who's now the VP of Marketing at TaxBit. Back in 2017, she used a bot algorithm to make not tens or hundreds of trades, but 30,000 trades. Ouch, that's a lot to keep track of. Fourth scenario, the passive income nightmare. The longer you live in crypto lands, the more you'll discover creative ways to generate money. You might even discover the glorious world of passive income. The twist, though, is that no matter how that passive income is generated, whether it's through airdrops, whether it's through generating yields, or something else you're not even aware of, that is all taxable. You are on the hook for all of it, even if you don't know about it, which is the really scary thing. In 2017, a certain Bitcoin whale received $2 million worth of Bitcoin Cash via the hard fork of Bitcoin. That happy news lasted until he was slapped with a surprise tax bill. And finally, the most important nightmare is the one that you and I don't even know about yet, the future nightmare scenario. So what you might not realize is the IRS is on a 2 or 3 year lag. They are playing catch up. This means that just because you didn't hear something now doesn't mean you're not going to. So if you have kind of a sinking feeling in your stomach that you might have flubbed your crypto taxes, but you think it's okay because the IRS didn't notice, just you wait. You can read my full article listing even more hellish crypto tax nightmares at coindesk.com/tax week.
All right, that was CoinDesk columnist Jeff Wilser with some very helpful tax advice. Hope you guys don't run into any trouble like that. All right, that's it for First Mover. Thank you, Lawrence Luton. I'm your host, Christine Lee. In the meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also, next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Russia's attack on Ukraine has moved into a second day. So what do added sanctions on Russia mean for the crypto world? Welcome to the Daily Forecast, February 25th, 2022. I'm Yaya Jata of Forecast, covering all things blockchain. It has been suggested that Russia could try leveraging crypto to evade tightening financial sanctions. But is that a realistic prospect? We'll take a look at that story and a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's see how the situation in Ukraine is hitting the crypto world. First up, trading volume on Ukrainian crypto exchange Kuna has more than tripled in just one day. 24-hour trading volume on Thursday morning Asia time was at around $1.5 million, but it zoomed to just under $5 million by Friday morning. Kuna users now face a hefty 7% premium over the global Bitcoin price due to demand outstripping supply. Bitcoin was trading at $41,546 there, as against a global price of $38,733. And the crypto market as a whole saw some recovery by Friday morning following Thursday's sell-off, with Terra leading the charge and surging over 21%. Meanwhile, though the suggestion of restricting Russia's access to the global payment messaging service SWIFT has not been acted on yet, tougher financial sanctions have been imposed. But could using crypto offer a way to evade them? Focus News' Timmy Shen reports.
The SWIFT financial messaging service was set up back in the 1970s and now operates in over 200 countries, enabling cross-border transactions to happen securely. Following a meeting of G7 world leaders discussing sanctions on Russia, the UK's Prime Minister Boris Johnson said nothing is off the table and the possibility of cutting off access to SWIFT remains. However, several experts told Forecast that even if that does happen, Russia is unlikely to turn to crypto to evade financial sanctions. Amnon Summit of Israel-based cybersecurity company Bitmint said that Russia may instead expand its homegrown system for transfer of financial messages, which is already used by many local banks. Summit also says that the recent move to regulate the circulation of cryptocurrencies could be a precursor to the issuance of stablecoins backed by the ruble, which could offset issues caused by its disconnection from SWIFT. However, he says that would take some time to implement. And Robbie Liu of Babel Finance told us that with mainstream stablecoins denominated in US dollars, it's particularly unlikely those will be used. And one expert told Forecast that the transparency of the blockchain is a powerful deterrent, as blockchain analytics could be used to detect and create alerts over suspicious transactions.
Blockchain analytics is going to be really critical for governments to make sure that they enforce and disrupt efforts to evade sanctions and to get ahead of any of those efforts.
Malcolm says that at present, Chainalysis are not seeing any unusual activity in Russia or Ukraine.
We're closely monitoring our data set of exchanges for any sort of spikes in activity that we might see. That being said, however, we have seen in terms of ruble Bitcoin trading pairs, we are definitely seeing a spike in those.
So it seems some investors in Russia are switching their rubles into Bitcoin, possibly as a safe haven. For Forecast, I'm Timmy Shan.
Taking a look at what's happening around the rest of the region. In South Korea, crypto businesses are scrambling to meet the Financial Action Task Force, or FATF's travel rule. The rule will be in full effect in the country from March 25th. The FATF rule requires crypto firms collect and disclose customer information on transactions above a threshold of $1,000. Around 30 Korean crypto and blockchain firms have partnered with Code, which is a joint venture formed to meet that rule. Code's solution uses blockchain to record the required data on nodes operated by members in a distributed server. The exchange Bithumb says testing of Code's solution has been completed by Bithumb, CoinOne, and Corbett, and that partnerships with various domestic and international crypto services are now being reviewed. While global exchanges have been hesitant to incorporate the travel rule due to privacy concerns, South Korea is leading the way in embracing it. And over in Australia, while the country's sunny skies and wide open spaces might seem like the perfect place to mine Bitcoin using solar power, things may not be as simple as that. Forecast Lachlan Keller has more from Melbourne, Australia.
With environmental concerns over Bitcoin mining high on the agenda, Australia might seem like an ideal choice to take advantage of large-scale Bitcoin operations. After all, deserts make up nearly 20% of the country's landmass, so they would seem perfect for the industry to draw on abundant availability of solar energy. Not only that, regulators in the country are starting to see the potential in the industry, with a recent parliamentary inquiry recommending a 10% tax concession for mining operations using 100% renewable energy. Nick Hughes-Jones of Australian Bitcoin mining operator Mawson Infrastructure told Forecast News there's a lot of interest from the industry. However, he warns it's not for everybody. To start with, the cost of keeping mining rigs cool when temperatures in Australia's deserts often exceed 40 degrees Celsius for weeks at a time could be prohibitive. Added to that, the further away facilities are from electrical infrastructure, the higher the costs due to energy dissipation in the power grid. So potential Bitcoin miners might be better looking elsewhere, like the cooler and more accessible states of Victoria or Tasmania. Indeed, Mawson itself operates Australia's biggest mining facility away from the desert, in Byron Bay on the east coast, working in partnership with Crimbrook Infrastructure to draw power from its biomass facility there. For Forecast, I'm Lachlan Keller from Melbourne, Australia.
And that's the daily forecast from our vantage point right here in Asia. We bring you the latest from the blockchain world from Monday to Friday. And for more, visit forecast.news. I'm Yaya Jata. Until next time.